Hey, welcome everyone. Tom, Park Avenue Forex. Going to do a little bit of analysis on the sterling yen live trade that we've been following, or the live trading that we've been following. It seems to me that we're having a little bit of difficulty getting over this upper TRN of 139.54. Now, what I'm going to do is I'm going to go back and do a little bit of analysis on the weekly charts so you guys can see what I was trained to look at to determine whether or not a marketplace is kind of losing some of its pep. A lot of times markets need to breathe in, breathe out. You know, breathing out means you're taking a nice little natural reaction down in order for it to regain its strength to come back up. It needs to flush out all the weak hands and then move higher. Now, I'm not saying it's going to flush out and move higher. We could trade back down to what I've been waiting for. Actually, is the lower TRN and actually this trend line of what I call higher value down into here, 136.17 area for a new look. But let's go over to the weekly charts and see what we could figure out from the weeklies. Oops, where are they? Okay, so here they are. Let me move them over for you right here. Let me get a fresh chart because this is like, you know, it's a little bit crowded, right? Let me go sterling yen. Candlesticks. I don't deal with firecrackers. I have a hard enough time learning to speak English. I can't. I don't want to learn any Japanese. Let me go to Tom's. My template's right there. Let's fatten these bad boys up a little bit. Okay, and nothing against anyone that wants to trade candlesticks. There's a lot of patterns and stuff, and Laz is an expert with Japanese candlesticks. So I would say check out Elite Traders. They have like a telegram room, free. You can learn a lot of stuff from him free. I mean, guy's awesome, real nice guy. Okay, so what's been going on with this marketplace on a weekly basis? Well, we had a high here way back in March 10th, 19. Okay, that high was not surpassed. Okay, so market came back up into what's I would call a sell, test to the top, sell, because this whole weekly bar is basically, you know, sale areas. Now the best parts of these sale areas are where you got congestion, and you could zoom down onto lower time frames and look for those points, you know, to look for taking a sale. Obviously your stop is going to be above this high. Now if you're dealing with weekly charts, okay, you need to stop like 1%. You need actually, what you should do is if it breaks this top and closes above this top, it's a warning. It's a penetration of the top, right? So you have to actually wait it out to see what the market wants to do and look for certain clues as to determine whether or not it's a false breakout. Now, you can determine that with what's called the closing price reversal. That's a technique that's, you know, not widely used, but it's not even really widely known. But I'll show you what a closing price reversal is. Let me find one. A closing price reversal is right here. Now, you'd want to look for this up here. I don't believe it happened up here. It didn't. But what you would want to see in the top is you want to see the market to open. It doesn't have to open higher than this high. This is actually, you know, what's known as a lap. Okay? But you want to see that the market makes a new high and closes down lower. That's a closing price reversal. That's more powerful than a key reversal. So the market trades higher, comes down and closes lower. Now you want to see that at a top. Okay, let's see if we can find one over here. Here's one. Here's a closing price just by a hair. 149.51. What's this one? 149. Yeah, this one did it. Perfect. Came up higher. Boom. Closed down lower. This is the first indication the market's tired. Now look what happens. It goes down nicely. Now if you were just impulsive, okay, you probably, most people, okay, in finding the need to do something is what kills them the most. That, you know, bad trades often based off the need to do something. But what happens is, if generally is traders, and this happens to all traders. I'm not just saying novice traders, but I'm saying all traders have, analysis paralysis. They see this. They haven't studied it well enough to believe it. Or they don't know. It's not even belief. This shit's probabilities. It's not guaranteed stuff. It's probabilities. We're playing probabilities. We're playing a game of poker or bridge. We have to play the probabilities, and not all probabilities work. But once you understand what the cards are on the table, so to speak, you have a better ability to take advantage of the probabilities. So anyway, this is a closing price reversal. What most people would do is like say, oh, well, by the time they probably get in here somewhere. And the market rips back up, but that's fine. This is all a test of the top, and what's the top? It's actually this bar way over here. This is the highest range weak bar that we have. This marketplace came up to test that top. That means that in this whole area is all more sales area. And then market comes down. Okay, so there's a key. That is a closing price reversal, stronger than a key reversal. All right, so what's going on here? Well, all right, so we have a top, we have a bottom, we have a top, we have a bottom, and we have this. All right, so that's it. Just joking. All right, so we have this top that did not surpass this top, okay? This is showing some weakness, all right? Now, market comes off, rallies, and we're going to check this out in a second. Let me show you how we can use Fibonacci over here. But I'm going to close down my short trade that I've had on for a while, so hang on one second. Okay, so we have this top. Now, watch what we can do here. And we can go for this top came down to this. I would consider this a little bit of a swing, a tiny swing, and then moved here. Okay, didn't really come down that much, but if I take from the last low of this swing, let's say 130.42, 130.42, and I go to this swing here, 147.95 out. Well, that's 17 big figures. And if I go 17 big figures times multiplied by 0.5, wait, 17 multiplied by 50%, 20, what? Something's stuck on my calculator. So it's 8.5 big figures down. So this was 148, and it went to like 140 almost. Okay, so it almost did a 50% decline, which is showing support. Now, if this was truly a rallying market, okay, now I'm just using an old commodity rule that they give to Gann, saying it's the 50% rule, but I don't think really Gann came up with it. I think that he basically, used what was going on at the time in the 1920s. They used this a lot. They would say, okay, 50% move down, okay, buy the 50%, and then look for the high to be surpassed. But it did go down about 50%, but it could not surpass the top. Okay, so the market came to this point, came back down, showing weakness. Okay, and here you'd be looking. Do I have right here? You have closing price reversal on the week right here. This was the first indication. Now, the only issue that we have with this one is that this one closed higher. So this was a total, actually it didn't close higher. It actually touched this and penetrated the top. So that would have been, if you would have taken that, you would have been going, ooh, because you would have got short in here. I mean, when this top is going to hold, the penetration of the top. Unfortunately, it didn't hold if you were short, and the following week you were pushed really way in the money. But okay, that's another discussion. So let's take this top, okay? Because remember we said the market did this, did this, did this, this. This is kind of, you could probably use this too back here. So the legs have been down, up, kind of, a box pattern up. So you have to go down, up, kind of slightly down, up, down. Can't make it. Okay, down, then the push down. Okay, so let's take this leg, 144.95, and we jump down to this crazy abortion week of 124. Now I say that because look at this. It blew right through these bottoms, which was really a bearish sell signal. However, it closed back up. So that basically negated this. But let me tell you now, okay, so if you would have got short at 126, you know, you had opportunity to get back on 124, 200 points. But really on a weekly basis, you're looking for like 10 big figures, not 2. So this would have been, for the long-term trend guys, would have been pretty painful because they would have taken it, not even painful, because if these guys are swinging for like, you know, we saw 17 big figures, you know, it's not painful, you know. It's nothing. It's just basically like maybe 15 pips or something like that for us guys, or 20 pips. So let's stick with this. So we got 144.95. 144.95. 144.95 in. Oh my God. Too much coffee. I keep hitting the wrong buttons. I keep going 114. 144.95 in. 124 what? 124.03 out. 124.03 out. 20.92 big figures. Multiply by 50%. 10.46 big figures. So we'd be looking for this market to go up 10.46 big figures. Okay, so if I take 124.03, 24.03, 10.46 in, 134.49. Okay, went up a little bit higher, so it went up more, but the first stop, yeah, 134.70, then 134.49. All right, so if we were to, how I would do this, because that's slippage, you know, that's called lost momentum. Let me put it down here, 134.49. We're talking about weekly charts. We're not really that far off, you know. And, you know, so here, do I have any closing price reversals on the week? No. I do get the first bar that basically is what I call a breakaway bar, where the top is lower than the highest bar's top and the bottom surpasses that bottom. So this is your first like indication, okay, weekly down. So you look to, you know, for the week you plot where good Fibonacci levels are, sell it and try to break this bottom, and it's a nice move. Okay, so we come from here, we come down to here, okay? So I could say, all right, now how do I know when this is ending? Well, if I go from here to here, I go from the 124.03, and I go to the top that was made on this guy, 135.75 out. You get 11.72 big figures. Multiply that by 0.50, 50%. That's 5.86 big figures. So if I take 135.75 and I take 5.86 out, I get 129.89. What's the low of this bugger? Holy shit. That's closer than I would. Okay, what I thought. 129.43. So what am I saying? I'm saying, okay, so you measured this to this. You found out that like this thing should basically stop at 129.89. Now we're talking, this is weeklies, okay? So if I come down here and go, okay, 129. Yeah, 129.88, okay? Anything below this price, below this line, is basically saying this is skid, right? And I'm not talking about underwear skid. I'm talking about market like skid, okay? So we could basically trade off of anything breaking higher than this line, okay? And we know that we have to put a stop, you know, below 129.27. Now we're talking about weekly charts, so you'd have to give yourself 100 points for a stop, because again, you could be skidding. But look at this market, boom, rallies right back up. Okay, so right from the point that we predicted. I am giving you guys such great stuff. I hope that you really watch this video, you know. So anyway, all right, so we got here to here, market powers up, breaks up to here. Okay, so where should it go? Well, I'm going to do the same thing. All right, I'm going to go from this low, okay, 129.27. Okay, I'm going to go to the swing high here of 139.73. It's 10.46 multiplied by 0.50, 50%, so it's 5.23. So this is what, 139, so 134 something, and it came down. Well, it's skidded lower. Okay, 134. Okay, hang on a second. What is this? 139.73. 139.73. 5.23 out. 134.5. So let's move it up. 134.5. Right there. So anything below this line is skid, but this is big skid, you know, because it's another 300 points. However, if I go from the ultimate low, let's see if I go from here to here. Let's see how that works out. Now, I'm not trying to optimize. I would do this. I would go, okay, wait a second. I'm blowing through my level, showing me, you know, this market should gain strength from this area and pop up and go higher than here, but it hasn't. And it hasn't even surpassed this high yet. So maybe this break in here is telling me this market's tired. You know, let me just here. Okay. This break down below what we projected is telling us that this market may be tired if it cannot get above these highs, these weekly highs. Maybe, okay? But also what I want to do is I want to take the low from this point, okay, to the high of this point and throw down my 50% level. Let's check that out, okay? Oh, what happened here? Went the wrong way. Sorry, fellas. Let's shut this off. Okay, so I finally figured out how to use that zoom feature, so I got all excited to use it and screwed it up. Okay, 124.01. 124.03. Not that it makes a difference, okay? To, it's just I'm a perfectionist. 139.73. So that's 15 big figures times 0.50. 785 big figures out. So 8 big figures. So 139.73 in. Okay. 7.85 out. Support at 131.88. That was much better, but still skidded. Support down at 131.88. So you could have actually ratcheted this down and said, okay, 131.88. Anything below here is skid. It's too far of a skid though. Again, this is showing weakness. All right. So that's how I'm trying to gather that this is kind of tired. All right. I hope that little lesson on the 50% rule was helpful, and I'll see you guys soon. Cheers.